Happy Friday, everyone, and welcome to another special Investors Business Daily installment of Barrons Live. It's Coram and Arnie Gutierrez here from the IBD team, and today we're going to be talking all about how to find game-changing stocks. Arnie, I think the first stock that comes to mind for me this year is NVIDIA, a chip stock that's been at the forefront of the AI revolution, a huge winner this year. And so I think a lot of traders, especially coming out of last year's bear market, we're ready once again to be finding those game-changing stocks that can really make a difference in our portfolio. Traders out there who want to outperform the S&P 500 and the broader market in a big way. And in order to do that, we need to find those really, really special stocks. So first, how would you define what is a game-changing
You know,
stock?
that's a great question. Over the years, being fortunate enough to work with Mr. O'Neill, Bill O'Neill, and Scott O'Neill, one of the questions they would always ask me when I would come to them was, "Is this stock changing the way we do things? Is this stock changing the way we live or play?" And if you can answer yes, you have something there. Okay, that is the foundation, the fundamental question that we always need to ask ourselves. Whether it's NVIDIA, whether it is Uber, whether it is Celsius, whether it is all of these stocks coming up, there's always something new. They're disruptors, but not all good stocks are not all great companies are going to be good stocks, right? So
Yeah.
that's why we need the tools available to really decipher, dig down, drill down, and have that stock convince me that this is a game-changing stock.
Exactly. And of course, by Bill O'Neill, you're referring to IBD's founder and his
Yes.
son, very instrumental in a lot of the research
Mhm.
tools that we at IBD use. But you're exactly right. A lot of the companies that you listed are indeed household names,
Mhm.
but sometimes they're changing the game before they become household names. So they might be, a hidden gem in the market before it's
Yeah.
really known what they are doing that's game changing. And that's another thing to be looking for is let's not just wait until they fall in our laps, right? Because that could be potentially later in the game for
Yeah,
some of these
this
stocks.
and that's a great question. The smart money, like we're looking at Nvidia. Nvidia has been around for a while, right? And it's last 10 years. I remember when it broke out of one of our reports at $36.
Yeah.
Key word there was artificial intelligence, right? AI. That is the key. That is the word of the year, if you ask me. You start looking at AI is going to be all over the place, right? And it's funny. I was just talking to a couple of the clients out there, and they're just like, "Are the robots coming?" Kind of thing. I was like, Possibly, if Nvidia keeps doing what it's doing, right?" Um, but yeah, we're looking for those game-changing stocks. We're looking for the ones that are going to change your portfolio. And anytime you look back at your portfolio, every year when you should always get used to doing some type of post analysis every year. You're always going to realize there's that one or two stocks that make that portfolio, and those are the ones you're trying to narrow down. And the best way to describe it is this: we are looking for the Michael Jordans of the market. Okay, everyone in the NBA is fantastic. They're great players, isn't it? But there's only a few Michael Jordans, Kobe Bryants. You get the idea with regards to that, and that's what we're searching for.
Okay, so it seems like there are a couple of factors to help us decipher beyond the just is this changing the way that we live, play, work? Is it a paradigm shift in technology? Something game changing like
Ye-
that, or these star companies. Beyond that, there are some specific factors to look at, and like you said, not every great company is a great stock. So clearly, stellar price performance and outperformance of the broad market is one of those factors.
Absolutely. You're going to be, when you're looking at the game changing stocks, and a lot of times you're going to be exposed to them. You're just not going to realize it, right? Whether you have like Eli Lilly or NVO with those Zempic, which I think may take down the restaurant industry, if you ask me, right? You have things like that. So, again, weight loss, things that trigger strong branding in a lot of these companies. That's where we're looking, but there's specific characteristics historically that
Right.
we've evolved over years. And one of the things that we pride ourselves here at IBD is we look back, study past winners. What are the characteristics? Because in the end, the stock market does not change. and the investors change, right? But it's still human nature on parade. You're still going to have to deal with fear and greed, I think. But one thing that doesn't change is the characteristics that they have before they make that big run. And we're looking to take full advantage of that when it does happen.
Yeah, that is a really great point. Those past winners, all that data, all of that research really provides the great blueprint. And that's how we know what to look for, right? With the game changers or potential game changers of today. So talk to us about what fuels a game changer, because it sounds like if you're talking about
It's
Lilly or
yeah,
NVO, or if you look at a past huge outperformer,
right.
Apple, a big total addressable market for what
App
they're doing.
Apple's one of those very, very unique plays, and it's because of their business model, product first and anything else. They were obsessed about simplifying the product model and kept making improvements, but they also created an ecosystem, a wall garden where they have to use everything with them. And another thing is they realized because they have such a dominant device, they became business partners with anyone that wanted to use their app application, where I believe it's like 30% they get of any app that's being used on an iPhone device. But that's the type of game changing that we're looking for. And Apple's a fantastic example. All right. But what comes with that? Sales we're looking at. We're looking at earnings, right? We're looking at the patterns because we like timing our buy, right? Last thing you want is dead money moving. And you use price consolidation. Another way we like to call is pattern recognition, to go in there and see exactly where the most optimal time to buy. You just don't want to buy a stock just because you want to buy a stock because the timing may be right, right? And you also want to protect your mental capital. It can be discouraging when you buy a stock. I love the story, I love the fundamentals, and then all of a sudden it goes against you. You're just like, what's wrong? Well, the timing's not there, and that's what we're looking to
Exactly.
do.
Yeah, I mean, you could have the best idea in the world or the best thesis, but if your timing is off, you have to know when to get out. Risk management above all, above thesis, above really having that conviction in a game-changing stock or even past performance too, right?
Absolutely. If you're going to want those big wins, risk management comes into play. That's how you separate. And I've been privileged enough to be talk to some of the best traders in the country, in the world, over the phone, meet them in person. And one of the foundations of anything is risk management, knowing when to get in, but also knowing when to get out. Right. So you
Yes.
want to, and there's a saying, you want to let your winners run, and you want to cut your losses immediately if the stock goes against you.
Yeah, because when we're talking about these super performing stocks, these aren't, your General Electrics or, your slower kind of, reliable, steady, dividend paying kind of stocks. If you want that super performance, I mean, these can be rocket ships in a short period of time. And that's not necessarily the kind of thing that you want to hold forever. Again, Apple, very unique, kind of in a class of its own. And once you have a big gain, you can treat stocks a little differently. Use longer term moving averages as you're selling signals there. But what would you say in terms of like the average move of a big high octane winner? What sort of time frame should we
Time
be
frame we're
looking
looking at here historically, and we went back and studied 100 years, where it was Xerox, whether it was when Yahoo came out, internet was being introduced, the same way the AI is being introduced now. um, the average is between 16 months to 22 months. Okay. But you want to buy right. That's when the first move starts taking place. And think about it. I said 16 months. So if you feel like you've missed out on something, don't feel that way. There's always going to be opportunities. We're right now, September, we're going through an inflection point, right? It's been a very historically, September has been one of the worst months in the year, proven fact. So you have to have that, and we are going through a market pullback, which in IBD we like call it a market correction, where you want to protect yourself and cash and be in cash. Okay, getting ready to find that winning stocks. Right now with this type of pullback, I'm excited. Because guess what? The stocks that I didn't buy or I missed out, because you can't kiss all the babies and look at every stock that comes through, right? I want to be able to go in there and be like, keep it on my watch list, and it starts forming that right side of the pattern, that right side of that price consolidation. And I'm like, okay, I'm looking for that pivot price or a buy
at?
price, which we like to use
Right.
in IBD.
Yeah, instead of trying to pick the bottom, waiting for a little bit of, signs of encouragement, because we don't know how long the pullback will last. But if we start seeing momentum back to the upside, that can put our odds in the favor. And I want to add a piece of research that some traders heard first on IBD Live this morning that I want to share with this audience too. That even though September is the worst month for stock market performance historically, research from a friend of IBD, co-author of the Life Cycle Trade, Eric Kroll, shared research with us that the month of October is historically the strongest for follow-through day signals. And at IBD, we use a follow-through day as a signal that can confirm a rally attempt that can lead to bigger gains in the market. So October, the best month for that. And most of those follow-through days happen between 15 and 20 trading days after a market correction,
Right.
which is a call that we made very recently. So it could be on the cup half
We
full
may be at the
perspective, just
eve, right?
a couple of weeks, if we are in the early stages of a bull market, to get the right side of the base patterns, as you're referring to, Arnie, for those to form and for us to get a market signal to get back in there. So I think focusing right now on, sharpening our pencils, what are those game-changing stocks that we can buy when we have the market wind at our backs?
Hmm.
Now
Hmm.
is the time to do that.
Absolutely. Now is a great time to start doing your research. Now is a great time to start looking at which stocks are holding up. When you see the Nasdaq taking the hit the way it did the last couple of days, you have to ask yourself, why are these stocks not falling apart? Right. And one of our big things that we look for, and what I look for, the foundation of our system or the foundation of investing, is I'm looking for institutions to be buying my stock. Right. They have the billions of dollars. They create 75% of the liquidity of the market, and I'm just following along with them. But patience pays in this type of market. You have to be patient.
Mhm.
You almost have to be surgical when you're going into a stock, knowing when to buy a stock. But the probability, everything in the market is based on high probability. The high probability of finding a what we like to call a model book stock, a game changing stock, happens when we get a very strong follow through. There's never been a bear market in the history of our follow through, in the history of us taking a macro perspective, looking at that didn't have a follow through day. Just remember that there has to be a follow through day.
Yes. So we'll be looking for that signal. And for those who want the exact details of that in a rally attempt, so in a short term or even long term bottom, you want to see the first up day. So today potentially could be day one of a rally attempt. Then we need at least 4 days of a rally attempt. And on that point, if we see a gain on one of the major indexes of 1.2% or more in volume heavier than the prior session. It doesn't have to be heavier than average, just heavier than the prior session. Speaking of institutions, we want to see that volume. So if we see more money flowing in on an up day, when you get a little bit of a string of up days, of course, it could take 15 to 20 trading days. It doesn't have to happen on day 4. But like you said, we want to see that institutional footprint. And so for those model book stocks, Arnie, when we're talking about how do you know if an institution is involved, it's looking at that volume profile, right? So there's a couple of different ways that we can take a look at institutional involvement, institutional
Right.
demand. What are some of the metrics that you look at for that?
A couple things. I'm always looking at the 50-day average volume, which is that red line that you see on the very bottom there. That's how we're gauging whether it's above average or below average volume on that chart that we have there. That's the first thing, right? Another thing, when we start looking and we do have a follow through day, I'm also looking for stocks to be going through some type of price consolidation. For those of you that don't have Market Smith, our charting tool, or we're looking for a pattern being developed, right? The right side, think of it, the right side of any type of price consolidation, or one of our most famous patterns, the couple pattern, is being created by institutions. They're creating the right side of a base,
Mhm.
right? And if you look at NVIDIA there, that right side there, that cup on the very bottom, characteristics there. We're looking at Nvidia, and this is kind of like you want to get used to looking at these type of stocks, how they react, the personality of the stock, and you can see that moving average that Ali has there, which we call the 10-week moving average. It never pierces through it, right? One test, two tests, three tests, and then it starts piercing through it, right? And we saw July, from mid-July to now, it's been very volatile, right? The news coming out, geopolitical, interest rates, high interest, inflation all over the place, kind of thing. But that's a different topic altogether. But you can see the personality of the stock staying put. It gets pulled
Mhm.
back, they buy some more. And guess what, you guys? Historically speaking, 10 weeks is a pretty long time. It's a pretty long time. But as soon as they touch it, guess who's coming in and buying it? Institutions. And you can see the little clues on the volume there on the very bottom as it touches the 50-day. You can see little clues telling you, wow, there's some real buying power. This
Mhm.
is a $420 stock. Our 100 shares are not going to do, our 200 shares, our 1,000 shares are not going to do anything for this stock, right? This is a whale of a push. So to push a stock like this up, real buying power has to come in. And why are we looking at the institutions? Because they're the ones with the resources. They're the ones with the young analysts going around, kicking the tire, talk to the executive teams, doing the research, right? Because a lot of these institutions, they want to be right. They have to be right, to stay in business. But you can tell as this stock was moving up, it's following
Mhm.
its personality and it finds support at the 10-week and it keeps coming up. And I'm looking at the clue to see. I'm looking at volume as a way of looking at it. The biggest clues that we have will always be price and volume. Those are the two most purest indicators in the market, right?
Right.
It's what it is. It's happening. My opinion doesn't matter. If they start selling, it starts selling. If profit taking starts taking place, profit taking starts taking place. And then we're seeing this pullback here. If we're going to start doing analysis on the video of what potentially could happen, I'd like to see support around 400. Right, you see that there, and that's why Ali's drawing that line there. Because if it does break that, it could be a little messy. I can see it going down to that bottom moving average that we see,
Mhm.
second net that we have, which is the 200. And
Right.
IBD, and a lot of investors and traders out there, we look at the 10-week and the 40-week or the 50-day or the 200-day as a way of gauging, is this trend still alive?
Mhm.
Cap trend.
Right. And this does mark 3 weeks down in a row for NVIDIA, which we haven't seen since that cut base that it broke out of at the beginning of the year that launched this huge move for the stock. So at best, if this is going to continue to be a game changer, now is a pivotal moment. Like you said,
Absolutely.
will it find support at 400? Maybe it could take a longer basing period. If not, but at least in this 3 weeks down, we are getting that lighter volume. And before, in a prior big move for the stock, 3 weeks down, that 40-week line did come up to catch up. It just needed to go sideways for a little bit longer to digest before it came out of that. And then, of course, like a lot of stocks got pulled down with the bear market. But great
And
clues
that
there
wasn't,
on the
you
volume
guys, it just
profile.
wasn't it just wasn't you. That was an ugly bear market. I mean, it was brutal. That's when he started telling us that Fed came out and started saying interest rates are going. I'm like, oh no. Right. Once they started, it was around late November 2021. They started mentioning that, and we came in and just kind of like,
Mhm.
okay, we're going into defensive posture here.
Right.
So
And then, for active traders, instead of just holding and hoping, that's
mm,
another good reason to use a sharp break of the 10-week line in volume, step aside, wait for the downtrend to subside, look for those moving averages to start turning, and then look for these base patterns.
great point to Ali. The chart will tell you before the fundamental data does. Remember that. The chart will always, for those of you listening, the chart will always tell you before the fundamental. And the worst thing you can ask, why is this happening? It's too late. You want to be proactive. And we have rules. When a stock does break the 10-day or the 50-day or the 50-week on above average volume, we like cutting our positions in
Yeah, at
half,
least
maybe a quarter.
trimming, at least trimming it a little bit if
Yeah,
it's
yeah.
a big
So
winner.
yeah, absolutely. So, and again, well, in a stock like this, what I like to do: prove it to me that I should be selling more, or prove it to me I should be buying more. You always want the stock to prove itself to you. Always. If you want
Mhm.
more of my hard-earned money, prove you want to keep going up. And if it does, you want to force feed it
Right.
methodically. Right.
Well said there, Arnie. Okay, so we've talked a lot about what makes a game changing stock on the fundamental side, on the technical side, institutional sponsorship, changing the way we live, play, work, those catalysts for sales, right? Big
Right.
addressable market. So we have all of these elements. So now how do we put it together? Let's give some actionable takeaways for the audience. Whether they use MarketSmith charts or a different charting platform, there are criteria that you can screen for, right? Because sometimes finding these game changing stocks can feel like trying to find a needle in a haystack. But if you have some parameters that help filter the noise, that can give you a good universe list to then layer on things more current, like what's the current market doing? What's the price and volume action for that stock doing? And that kind of thing. Once you have some good screening parameters, right?
Absolutely. Screening is a great way of taking the emotion out of making a decision. And I use screening not more of like I found the perfect screen. There is no such thing as a perfect screen in any platform you're using, right? But what you're doing is you're creating specific criteria historically that have proven to be a recipe for success. That's what we're looking for. And you're getting a list. And a lot of these database, a lot of these charting tools, MarketSmith has a huge database. So you want to narrow that down. We also want to save time. Time is I got a lot going on with my 7-year-old and 9-year-old, right? So I need to be able to do my research, be very quick, and always be on top of what's moving in the market, staying focused. And you don't have to be in front of your screen every day. You want to be looking at the market 2 or 3. That's why we're looking at this weekly chart here. Our founder, William O'Neill, he created this work of art. It's been around for 40 years. You have the technicals and then you have the fundamentals all within a single view, right?
Exactly.
It's a beautiful chart. But
Mhm.
yeah, screening is definitely you have to have. There's no way around that because the market can be changing. Stocks can be going against you. There could be a lot of different variables, and there's only so many stocks you can follow.
Right. So we have three screens that Arnie has pre-built that we're going to go through the parameters and then have some live chart analysis of these potential game changers. So get out your pens and pencils if you're following along or screen grab these charting parameters. Which one should we start with first? How about
Yeah,
the technical
yeah,
gems?
yeah. Let's go there. If we go to open edits, I could just explain the criteria of what I'm looking
Yes.
for. So here I created a screen, one of the screens, and first thing I want to mention that whenever I screen, I have a technical screen, a fundamental screen, and an IPO screen. I keep it very, very simple, right? IPO screens, which I'll talk about in a little, take longer time to develop. And you're going to notice the fundamentals may not be there, but the story's there, right? So I got to
Right.
just make
So
sure I'm
maybe
not losing
early
focus.
stage game changers.
Exactly. But if you're looking to capture big movies from the ground up, like the Nvidias when it was at 16, 20, 30, they're going to end up in the IPO when they do IPO. But for this screen here, technical, we're looking at stocks. We're looking for institutional quality stocks, first of all. And institutions don't have the ability to buy low price stocks. So we look for a minimum of $15 a share. Volume. Institutions need liquidity. They just can't come and go and buy a stock. They got to be very careful when they buy or sell a stock because they have the power to move the market, right? But I am looking for liquidity, a minimum of 1,000 shares being traded within the last 50 days, a
A
minimum of
thou a thousand
I'm sorry, I'm
times
sorry, a
a
million shares being
thousand
traded. Yes, a million shares being traded a day.
million shares.
Thank you for that correction.
Basically, we're looking for 1 million shares in terms of
Mhm.
50-day average volume.
Right, right. And then we'll have the up down volume ratio. This is where I'm going to be looking for clues, you guys. This is up days versus down days on above average volume. When I'm analyzing patterns, when I'm analyzing price consolidations, when I'm analyzing whether it's being accumulated, using this ratio here and it filters out the ones that are trending up. Okay. I like stocks that are trending up, or if not, if they're being supported by institutions. That's the big thing here. It's a great way of gauging accumulation and distribution by institutions. Uh, the following one is I want to make sure that from a technical standpoint, for those of you that are new, we look at moving averages as a way of gauging the trend of a stock, the price trend. So I want to see them stacked up, and we use here at MarketSmith, we use the 50-day, the 150, or the 200-day. Sometimes short term, I'm looking at a 10-day, 20-day, 21-day, and a 50-day. But for big picture purposes, I'm a big believer in the weekly chart because in this day of age of high frequency trading, it removes the noise. And then we have the RS rating at 85. Basically, I'm going to sum it up for you. 85, meaning that the RS rating allows you to gauge that stock's price performance within the last 52 weeks, and it's comparing that stock versus the stocks in the IBD database. So a score of 85, it's outperforming 85% of the stocks on price action. Okay, we like buying stocks that are going higher, that'll keep going higher. Okay, that's the mentality that we have.
So
Okay.
we're looking for liquidity. We're looking for more buying volume than selling. We're looking for those stacked rising moving averages. And then we're looking for stocks that are outperforming their peers.
Right.
Great.
Right. And notice this is just technical, no fundamental information, just technicals, just on the technicals itself.
Yeah. So let's look at one stock in this screen real quick before we move on, because we want to get to the other screens. How should I sort this list?
I
Right
would
now,
sort.
it's alphabetical, but
Right. I would sort it based on RS rating since it's a technical screen.
okay, then
There it
let's
is. So
do
we're going to go
that.
ahead and sort that and give me the top names there. And as
So
you
the
start
first one
scrolling,
here is Abercrombie,
yeah,
which
this
is a strong
this
technical
good. This
mover this
stock
year.
now. I will say this. Let's stay here. Let's stay here, right?
Yeah.
And I have a good story about how my a lot of younger, the younger generation. I guess I don't want to feel too old.
Hey,
They're
Arnie, I'm wearing Abercrombie jeans right now. Am I
right.
cool?
Okay, proves my point, right? Okay, it's happening right now. This is a turnaround story, but the fundamentals have changed, right? The technicals, the facts have changed. And looking at this here, you can see that it broke out of. If you could place your cursor on that pattern for me there,
Mhm.
Allie. Inside, just
Yes.
we can get a little bit. You can see that it broke out of a first stage base. The buy price was at 31.69, a redirection of price trend. And look at what it's done. Okay, it's almost doubled, close to doubling, but it's done a really good job of moving
Mhm.
up. But if you
Yeah, and
look
it
to
had
the,
I'm so sorry to interrupt you, but it had a fundamental catalyst, which I think is what you were about to start
that's
talking
about
about.
to jump in
Yeah.
now. Now we're going to look to the left. We know it's a pattern, right? So if I didn't see that before, it's in the pattern. I'm going to look to the left, right? Now, Abercrombie and Fitch comes into a play where is it changing the way is closed? No, it's not going to do anything like that, right?
I don't
But
know.
the
I feel pretty comfortable right
but
now.
but I am looking at companies that have strong branding,
Yeah.
right? Okay, so they have strong branding, and you can look at the left on the left hand side, the three most recent quarters, and they've been picking up earnings and sales, right?
Mhm.
If it doesn't have earnings and sales increasing as well, I'm not most likely going to look at this stock. But look at
Yeah.
they're in triple digits,
Mhm.
triple
Yeah,
digits. That's
it's a major turnaround. I mean, if it up here we can see the annual earnings. So in 2021
yeah,
negative,
yeah,
then then it chopped around a little bit, but now from 2023 annual earnings at 25 cents, 2024 for the full year, that's expected to hit well over
look at
$4.
that.
So
I mean,
that's
look
some
at the
booming
estimate on
growth.
that. That
Yeah.
is a beast mode, kind of like, look out, this is happening. And guess what's happening when I'm looking at the chart action, the price action? It's real because the smart money's supporting it. And you can see it. The number of funds within the last 2 quarters has been picking up in that little section. The number of funds that are buying the stock has been picking up. So that's a nice feature to see as it's happening. And we also look at the technicals, RS rating of a 99. 99. We're looking at the top, one of the top stocks based on price action in
Mhm.
our database, which is something that we look for all the time.
Right. And so then this is the tough question is, well, how do we know if this is a good stock or a game changing one? I mean, I think in the current market, we've talked about AI. So I feel like traders' brains may automatically go to technology. So that has to be the game changing stock.
Yes,
But over history, retailers
yes.
have been game
Ga-
changers.
Retailers have been game changers. The thing with Abercrombie though is they've been around for a while, right? So
Yeah.
retail will have to have some type of technology, proprietary, something disruptive that no one else has to have that niche, right?
Right.
Um, but guess what? An Abercrombie, I'll take the 100%, 80 to 100% return because I don't think it's over the way it's looking at now. Even with
Mhm.
this pullback, it's still holding up very, very
Right.
nicely. But the point is, you always want to time your buying. We're buying that stock when it's breaking out of that base. And look at that volume spike that we have there when it did break out. It was huge. It was huge. The 50-day, what's the 50-day average volume for this stock? Ali, if you go to the daily chart real quick, I just want to
Mhm.
see.
Sure.
Uh, I
A little
mean, you're
bit
looking at
closer.
it trades 2 million. That day it was at 26 million. So you can see it there on the Verita average daily volume, 2 million. On that, it was on this day. Well, excuse me, it was at 13 million when it started breaking out and all that information started
Mhm.
coming in, which was on an earnings gap up. And guess what? When you get that type of power, for those of you that do play earnings, and you get that gap up with that type of price action and then close up like that, you have something here. Okay.
Mhm.
You should be very paying attention to it. If you understand the rent, you also want to trade what you understand, right? So this is doing really well. Retail and tech has been, me personally, I like looking at stocks in retail and tech. That's where I'm going to
Right.
find the big movers.
Right. Yeah, and I don't want us to get down too much of a rabbit hole here because there's so many things to consider. You've got the technicals, you've got the fundamentals. Institutions are key. Seems like we're seeing all that. Is Abercrombie mega super cycle game changer? I don't know, but like you said, it's showing strength right now. It has all the elements there. And I've got to tell you, I think, when the pandemic hit, a lot of people traded in their workwear for sweats and yoga pants. And I think now we're ready to get back to normal life, but we still want to be comfortable. And so what I like is they're fashionable jeans, but they're selling looser styles. They're relaxed. They're even literally on the label, it says loose fit. Thank you. So yeah, I want that
Okay.
fashionable sense, but I also want to be comfortable. So I don't know. The more I'm thinking about this,
So
this
did you buy the stock? Because you
is
just convinced
changing.
me.
I know.
Trade what you know. I mean, you tell me.
I like earnings gaps. So I missed these last two. So
Okay. All right.
I did do that
Yeah.
with Elf Beauty. That's a whole nother story. But
Elf was
I
a
like the earnings gap. So that's like I guess another factor to consider with these game changing stocks. If
mhm.
you see a huge beat and raise quarterly report, massive numbers. I mean, going back to Nvidia, up until the most recent quarter, if you look at the last couple, yes, it was going negative to positive, but it was beat and raise, huge outlook, huge volume, and huge price moves. I mean, those are all really big clues that something's going on here.
Yeah, I mean, even with the weekly chart in the video, you saw earnings accelerating. You saw them picking up. I mean, when it goes from, you can see it improving in the last 2 quarters. It
Mhm,
went from negative there to 100% in sales. Those are real numbers, right?
mhm.
And historically speaking, for those of you that feel like they missed out on NVIDIA, we're just starting. Okay, I'm going to say that now. We are just starting. Okay.
Yeah,
We may look back 6 months from now, like, man, Arnie just did that webinar. We talked about 400. Wow, was that a great price? Right. As it started
yeah,
consolidating and making its way. But looking at those numbers and the forecasting behind this, but again, what's the it factor? Artificial intelligence. They are the best at what they do when it comes to chip making. Okay, you
right.
always want to do your research. And the way Ali just described Abercrombie and Fitch is how you want to dig in there and find out what they do. And sometimes I read these 10Ks, 10Qs, and I'm confused, right? Especially with these biotech, the tech. I'm like, what do you guys do? Right. I sometimes have to go in and maybe look at a video in IBD or maybe go into YouTube. Some of these guys do a really good job. Dumb it down for me. Keep it simple, right? What do you do exactly? What is your niche? And if it's something that I say, okay, there's something here, I'm definitely going to pull up a weekly chart, start analyzing and drilling down on the
Mhm.
fundamentals and the technicals, and see it. And it may keep it on a watch list.
Right. And I think it goes without saying, but it's still worth repeating. Even the most promising of stocks and the most thesis, bullish thesis you can have out there, we need the market to cooperate, right? So that is one ingredient that's currently missing. But I know we did cover that earlier. Let's go over these other two screens, Arnie. Let's go.
Yeah, so I just gave you
Let's
a technical screen, and remember, I narrowed out that list from 7,400 stocks. Now we got it down to 36 stocks, which is very, very manageable, right? And I'm looking for stocks with institutional quality stocks that look at 15 million shares being traded. Here's the catch: sales and earnings, right? Sales and earnings. Okay, historically speaking, there was been a minimum of a 25 to 30%, but the average, you guys, on sales and earnings on these before they really have a big takeoff was 50%. Okay, just have that in the back. But I want to widen the net. There's no such thing as a perfect string, just to see what comes up. Maybe it's getting into development. Who knows? But the technicals may not be there, but I just want to see what comes up. So when I pull that up there.
And this is for the most recent quarter. So we're looking at the most recent quarter where sales at least 30% growth and earnings at least 30% growth. So now we'll view the screen results. So what should we sort this?
And you can see NVIDIA shows up on that stock there. I mean, if you can show me that whole list there. I mean, there'll be some that you're just going to be like, huh, kind of thing, but it's just not there. But as we're working through that list, and you have ELF in there as well. We just talked about one of the biggest leaders here. But, you know, and then you have Celsius in there as well. You know, go ahead and doing that. I'm just trying to show the potential of this screen here. Like Celsius is a great example, you guys, of strong marketing. It's challenged. It's going after. It's being supported by Pepsi. It's going after Monster, right? You drink this, all of a sudden you start cutting like 20 pounds. Okay, I guess, or something like that, right? You start losing weight, which didn't work on me. All right, but again, we're doing the analysis here, but timing is everything, right? And you want to make sure when it does do that, it is pulling back now. But if you had bought it here, again, when it broke out, you're still looking at a potential 100% move, right? This is not done though. You got, just because it's having a bad week, just because it means there's profit taking place, especially in September. I am not surprised this is taking place in September, because a lot of portfolio managers, and there's thousands of portfolios, are looking to rebalance and take profits. Right, on their holdings. So we're seeing this here. It's pulling back, but guess what? It's pulling back and finding at the moment support at the 10-week. Remember, we shared that stock. There was the stock that we initially, how it just kept following. I think it was NVIDIA. It kept following the 10-week over and over. You can see the personality is still consistent. Nothing is wrong, especially if you're holding this stock. I believe this is a game-changing stock. I believe this has that that it factor. A lot of people are talking about this stock. I see a lot of people at the gym drinking Celsius. It's in every vending machine. You go to 7-Eleven or you go to the Walmart. And I also like looking, right? I needed to see. I went to a Target recently, and I went to the Celsius section just to see it. It was practically half gone, right? So someone's coming in just taking everything, kind of thing. So it's there. It's there, but this is classic case of profit taking, because what happens is you're going to see that little gray area here that we have. I'm sorry, the green area. That's where we suggest you take profits. And I'm going to explain this to you. After a 20-25% run up that we see there, you guys, looking at your portfolio in any, whether you're using MarketSmith or any type of trading platform, you want to get comfortable taking a little bit off the table. Right.
So similar situation here. We had a gap up on earnings that led to a nice move, but where did it hit a little bit of trouble? Once it was up around 20%.
Exactly. Historically speaking, this just did not come up accidentally. We went back and studied the stock market for the past 100 years. And again, the market doesn't change. It's still right. It is going to do what it's going to do. It consolidated, found support at the 50-day, and went up again, kind of thing. So again, you want to gauge the personality of the stock. You don't want to panic. It's okay. You know, in order for you to capture another thing is, I really want to emphasize today, in order for you to capture the game-winning it factor companies, the star power companies, you're going to have to handle pullbacks. It's part of the game.
But sorry to jump in here. We want to be handling those pullbacks when we're up on a position, not suffering through a 20% drawdown, right? So so there's a distinction there.
Yeah, I mean, if you're new to investing, right? You'll start having gauge. You could always start taking some off the table, cutting your positions, which is something I do methodically as it breaks the 21-day or 50-day. But if you're long term, you believe this stock kind of thing, it's okay to see the pullback. It's when the stock breaks the 50-day, historically speaking, or the 10-week is when it's a sign of concern. All right, because that tells us that the institutions, and when I mean institutions, the mutual funds are not supporting the stock. All right. They want to see it come down a little bit more.
Another quick thing, and then let's move on to our last screen. And some traders out there might be asking, well, if this is a game changer, why buy it above 200? Now I'm getting it for a $40 discount Arnie here, but it's down 14% this week alone in increased volume. And if you look at a similar week for the stock, granted, this was right before the bear market, but it was down over 20% after an uptrend, sliced below the 10-week though. So a little bit more room, but that led to more weakness. So basically we want to see that base develop. We want to see the left side, a bottom, and then it's starting to come back up.
Yeah, absolutely. So we don't know if it's going to come back up. I mean, that's a fact. We need it to consolidate. And I'm looking for it to consolidate because it tells me the buyer and sellers are having a tug of war with it. Yeah, buyers and sellers, tug of war. Who's going to win? Buyers have, you've seen the bottom of the base take form, right? And then you want to see sellers dry up, and then you want the right side of the base. You want to see the victory, the right side of the buyers are coming in and they're winning. They're like, okay, we're going to take it up. The real money's going to come in. All right, you want to give it to us at this price? We'll take it. So they're going to start inching their way up at this price. You know, they're trying to optimize the return as well. But for a retail investors like we are, it's a risk management play. We don't know if it's going to stop going down, right? The only way we know that's going to stop is when it goes through that type of price consolidation, right?
Exactly.
And we're gauging risk. We are managing our risk that way. I don't like gambling. I don't like the game of chance. I like high probability. I like having a slight edge, and I like timing my buys.
Well said. Let's go over this last screen really quickly and then
IPOs,
do a wrap up. So yeah, IPOs, of course, if you're
big.
thinking about game changers, catching stocks in their early stages can be a good thing.
Yeah, absolutely. You know, we're going with the most recent IPOs. I mean, IPO has been a hot topic in the last couple of weeks with ARM and Carta. But this screen, you know, we're looking at $15 minimum. I lowered the liquidity on this because it's still a brand new stock. You know, but I'm still looking for institutional quality stock. Not so I'm looking for a minimum of 850,000, and I'm looking for stocks that IPO from 2022 to present. And 10 stocks came up. Okay, you can see Cart is in there, Kava is in there, ARM is in here. Okay, now here's the catch, you guys. Okay, there's a reason why we don't buy stocks unless they're breaking out of a base. Okay, we need some type of IPO base. What I mean by base is some type of price consolidation, and our pattern recognition identifies that for you. But basically, we're looking for at least 3 weeks of price consolidation, and you want to see a breakout and take the high of that IPO, basically. So we're waiting for a base, but look at ARM, right? They're in everything right now. You look at CART, it's taking a hit as when it IPO'd, and you have a lot of investors in there that started off with this company cashing in. All right. And then you have Kava, one of the stocks we've been looking at. One stock that looks interesting to me is Mobileye. We're going to talk about one. This is looking very, very, it's an Israeli company, Mobileye, autonomous driving. That's something big. And looking at this here, I like the way it's looking. Hasn't broken out yet, but you can see today had a very, very nice day. It is now above the that's your 200-day, right, Allie?
So yeah, the 40-week.
So we're looking at this here, but we haven't bought this stock because it hasn't broken out yet. Our buy price would be around 48.11, but Allie right here, she's getting aggressive. See, Allie's right here she's drawing the line. That's an aggressive way of getting in, which a lot of individuals can. But if you're going to go through that alternative buy point, you want to make sure that the volume is stacking up, which it is. Look at the blue scrapers here. Look at this, above average volume. There's big buying coming in. And the number of shares that are traded for this stock is about 2.5 million shares, right? Now it's below average now, but it's not going down in price, right? So what does that tell you? There's still buyers are still in control of this stock. Now, if this starts taking off and starts breaking out, this will be on my focus. This is on my focus list. This is something that's going to catch my interest. And if it can clear that 45.10, the most recent resistance there, I may be beginning to initiate if the market changes its way, if we get that follow through day. Because if the market stays in correction, 3 out of every 4 stocks will follow the direction of the market. And right now we're in a market in a correction. There's been a lot of distribution. The market's been very distribution heavy, and until proven other ways, I'm going to be very careful buying breakouts at this very moment.
Right. We do have to wrap, but there's one question that I do want to get to because I think I can knock it out pretty quickly here because we talked about gaps up on earnings, and Richard is saying, so how do you know if a gap up is real as it's happening or if it's a fake out? Going back to NVIDIA, I think that's a great example. But
Absolutely.
what
Great
we like to
example.
do is wait till the end of the trading day, because sometimes you can get a gap up at the open and a poor close. If it's looking like a strong close in the upper half of the trading range for the day, that's one signal. There's no guarantee, so we always use risk management. But a great example here, we had a strong close in the February reaction. We had a great close as well in the May reaction. But it opened strong in the August reaction and then closed at the bottom of its range. So one signal perhaps there to maybe stay away from the stock, especially after you have two big gap ups and beat and raises and a huge price move, maybe losing a little bit of momentum at this point, but we'll have to see if it can form one of those bases and break out again. I think game changer mode back on, Arnie, if that happens.
Yeah, absolutely. Definitely looking for that price consolidation taking place. And when you get that type of breakout, you guys, obviously it's Nvidia, but when you get a big stock like Nvidia and it breaks out, that's a lot of buying power. That is huge, right? And it usually takes about, the average time it takes for a portfolio manager to initiate a full position is 30 to 40. I'm sorry, it takes about 2 to 3 months. But when you get that type of price action, it gaps up. What I'm going to look for it to maybe fade off into looking for moving average support at the 10-day, or if it doesn't want to stop, I'm looking for it to completely take out the high when it did break out, gap up.
Awesome. Well, thank you, Arnie, so much for so
Thanks
many
for having me. Good.
actionable tips and takeaways for the audience. And we wish everyone luck in their hunt to find the next game changing stocks. That is it for this month.